These last few days, the rupee has also been misbehaving, spending most of its time between 51.5 and 52. That's alarmed stock market participants as well. To get a sense of whether this kind of outflows, which have picked up of late from FIIs, will continue and whether the rupee will head eventually to 52 plus, Bhanu Baweja of UBS joins in now. Bhanu, thanks very much for joining in. What do you think is responsible for the kind of outflows that we are seeing over the last few weeks from emerging markets overall, the FII outflow?
Well, for the developed world, so far this has been a balance sheet problem, i.e. a deleveraging problem. But for the rest of the world, large parts of the emerging market space, this is a very, very severe income statement problem. We have not seen a global slowdown of this magnitude since at least 1980s and very likely well before that, probably since after the Second World War. And so what we are likely to see in several emerging market economies which have absolutely no debt, which have large reserves, which are still external net creditors, we are going to see at least the trading sector completely collapse. That's going to have an impact on inflation. Of course, it's going to turn into deflation. That's going to have an impact on domestic spending and unfortunately also on employment levels, as a result of which several emerging markets are seeing this huge flow of capital from the Anglo-Saxon economies reverse. And that's something that we do expect in the months and quarters ahead as well. I don't think at this point anybody would want to come out and invest into emerging markets. In fact, people are going to hold capital as close to their chest as they possibly can, which means emerging markets economies, even if they don't have a structural problem, will have a cyclical problem, and their economies are going to weaken quite a lot, and their currencies are going to weaken quite a lot.
There's been almost an acceleration of pressure, though, on the rupee, Bhanu. Over the next couple of weeks or even months, where do you see the currency headed? Much beyond that 52 level?
We are bearish on the Indian rupee over the next 6 to 12 months. We do think that we are going to see levels of 55 against the US dollar before the rupee begins to once again strengthen on a 1 to 2 year outlook. The reason that we are still bearish, as I said, was number one is dollar strength. We do think that there will be tremendous demand for liquidity. There will be tremendous demand for money from global banks, and that will mean that they will repatriate capital in US dollar terms. The current account deficit is going to move back towards balance, but the kind of inflows that India has seen at the cyclical peak, both foreign direct inflows and also portfolio inflows, will obviously be slowing down. And also, I think remittances into India will slow down somewhat. So on balance, the balance of payments picture is not going to look attractive enough for the rupee to see severe strength, strong strength in the coming quarters. Over the 2 to 3 year horizon, I think once dollar weakness begins to set in again, I think that's when we can see the rupee strengthening. The thing about the Indian economy is that structurally it needs much higher savings rates, much higher investment rates. And for a brief period, that is exactly what it saw. But the public dis-saving in India, the fiscal deficit, the center plus state deficit, remains so high on a cyclically adjusted basis that I think that's going to crowd out private investment for a long time. So what we really need in India is for public dis-saving to fall and for private saving and private investment to rise, for India's trend growth to increase. Unfortunately, we are seeing completely the opposite of that at this time. So although India is not going to suffer as much as the US economy, I think it'll be wrong of us to celebrate that India is not going to negative 3% growth. In fact, it's growing at only 4%. Let's remember, India is a large, poor economy, and it is going 3 to 4% growth doesn't amount for much. That's basic subsistence. India can grow at well above 10% if the private sector savings and investment ratios do rise from here. But for that, we need public dis-save to fall. Unfortunately, the outlook right now is pretty grim, and we're looking for the rupee to depreciate towards 55.
What's your take, Bhanu, about global equities, which have collapsed in the last few weeks? I mean, new lows for pretty much all markets. Do you see this kind of risk aversion towards equities as an asset class continuing even from here?
Oh, very much so. I mean, why should one buy equities? We should buy equities because you think that the PE ratio is pretty cheap right now. But unfortunately, there's no way to tell if the PE ratio is pretty cheap right now. What is E? We do not, and I'm saying the street does not know what the earnings outlook for any companies at this point. For that, we go back to what we touched upon earlier in this conversation. We need to get a sense of where exactly the macro bottom lies. At this point, I don't think that's known to the community, and we are still skating on pretty thin ice. So I think the cyclical outlook for the global economy remains extremely negative. The risks are still skewed to the downside, and I do think that there's downside risks to global equities still. There are risks, for instance, to the U.S. financial system. The kind of stimulus that the Fed has given the U.S. financial system may or may not work. At this point, things are not looking very good, but I'm sure the authorities out there will come up with more clear, more transparent, and more preemptive policies than they have done so far. That is as much a hope as it is a prognosis. And we do think that over the next 4 quarters, things are likely to bottom out. But just for now, I don't think that people will be interested in taking big bets. And there is downside risk for equities right now just because the earnings outlook remains very, very unclear.
The beneficiary, Bhanu, to all this currency weakness in Asia has been the dollar. Do you see that lasting long, and how do you expect this particular currency to perform for the rest of the year?
Well, the dollar is the world's reserve currency. When we think of this crisis, we must think in terms of what this crisis is about. It's a credit crisis. It's a crisis of debt, and therefore it's a crisis of liquidity. Now, what is liquidity? What is money? If we go back to sort of the first lecture in economics, liquidity is anything which is a store of wealth, a measure of value, a unit of exchange. Unfortunately, there are not many things in the world which you can call money. And I think dollar, despite all the problems that it has, and it has plenty, in the short term, is the only form of liquidity. So if everyone wants to hoard liquidity, as of course everyone does right now, everyone will want to hoard US dollars. And that's the reason why the US dollar is bid. It's not about how strong the US economy is relative to the rest of the world. It is not. The US economy is not stronger. It has several problems which will manifest themselves in a weaker dollar, perhaps over a 2 to 3 year time horizon. However, over the next 6 to 12 months, as long as we're in a world where we are obsessed with the return of capital as opposed to the return on capital, the dollar is going to stay bid.
Bhanu, appreciate you taking time out this morning. Lots of interesting points on the currency and about global equities as well. We're going to take a